Hi there, and welcome to this virtual volunteer training of the Dallas Community Tax Centers. This training is specific to those volunteers who have already gone through the fundamentals training for our volunteers. In the fundamental training, you would have already gained some understanding of some quality tax return preparation as well as ethics. You have gained some understanding of the intake, interview, and quality review process using the Form 13614C. And you have also gained some understanding or familiarity with the lingo and what some word terms refer to. In this virtual training, it is true and it is truly virtual. I will attempt to explain the information as clearly as I can. As with any virtual training, you will have the opportunity to stop the recording, to re-listen for additional clarity, and even to start over again. You nor I in this training will be able to ask questions of each other. Well, let me rephrase that. We can ask each other questions, but neither of us will be able to hear the answer. Spoiler alert. The boot camp training is designed to take you to the next level in your training knowledge. During this training, you will be sharpening your tax skills, increase your confidence, and prepare you to successfully pass the IRS Advanced Certification Test, which is the test required of all volunteers. Yes, even me. As we go through this course, I will be recapping, clarifying the lessons from the fundamental course while imparting new knowledge. Once again, welcome, get ready to learn, engage, and elevate your skills because this is where the real tax pros are made. Welcome to Bootcamp, y'all. Now, this screen represents the agenda, the general agenda that I will be following. Per each topic, I will be providing references to the Form 1361C, Publication 4012, which is your primary resource guide, and other forms and information. With that said, go ahead and bookmark those two primary items on a split screen, two screens, two monitors, or simply a tab will work. You just need to be able to get to them quickly to visualize what I'm saying. All or some screenshots will be shown as well as we walk through this training. So I will give you a moment to look at the agenda. Once again, allow me to take a moment to let you know how deeply Dallas Community Tax Centers appreciate you. You already have come far, and you are only a few steps away from becoming an IRS Advanced Certified Volunteer, an achievement we're excited to see you reach. This bootcamp training, once again, is designed to extend everything covered in the fundamentals training. Me and the team's goal is to strengthen your understanding of tax laws and provide more insight into the real world scenario or real life scenarios you may encounter at our tax sites. We want you to feel comfortable, supported, and fully prepared for the clients and the situations you'll face throughout the season. So let's kick off this recap with who must file. To even start a federal tax return, we need to determine whether or not there is even a need for the taxpayer to file or submit a tax return. I asked you earlier to already have your publication or your Pub 4012 and the Form 13614C tabbed so that you can readily toggle between the tabs. In order to determine who must file, I can simply go to the publication or the Pub 4012, tab A. Page A3 provides a chart. I call it the if, and then chart. If you are column represents filing status. is the taxpayer filing as single or married joint or head of household? And at the end of 2025, you were reference this age column. And the then file a return if your gross income was at least what is the taxpayer's income. So that is my if, and then columns kind of explain. I know that you've seen this in the fundamentals course. So now this tells me, based upon those three criteria, filing status, age, and income, I can determine whether or not the taxpayer has a filing requirement or whether or not he needs to file a tax return. How do I get there? By the information shown on the taxpayer's completed form 13614C. Toggle over to that form, please. Here's where to begin. Once again, this was covered in the fundamentals course. To begin a tax return, the taxpayer must have completed the form 13614C, showed a valid photo ID, Social Security cards, and all the relevant income, expense, education, marketplace insurance documents such as the Form 1095A as outlined in the Pub 4012 Tab B. So this form carries quite a bit of information and should be reviewed with the taxpayer before we begin any input at all. When determining a taxpayer's filing status, you will need to know, or you will need to identify whether or not they are married, filing jointly, single, married filing separately, head of household, or a qualifying surviving spouse. Using the decision tree shown in the Pub 4012, tab B, page 13, helps you in making that determination. This chart is very helpful. As a volunteer preparer, you are allowed to interview the taxpayer using this chart to determine the proper filing status. Once we determine whether or not the taxpayer is required to file based upon review of the Form 13614C, income source documents, and the decision tree on page B-12, we're now able to move on to whether or not they have qualifying dependents. You may recall from the fundamentals training course, there are only two types of dependents, a qualifying child and the qualifying relative. Each type of dependent has a specific test which must be met to cause them to be qualifying. The qualifying child tests are, number one, the child must be your child or deemed your child as listed in the chart. Number two, there is an age test listed for the child. Number three, the child must live with the taxpayer. Number four, there is a support test which must be met. Number five, the child cannot file a joint return with a spouse except under certain conditions. And number six, the taxpayer, must be able to claim the child as a dependent if the child is a qualifying child of more than one person. Now, for the qualifying relative test, the relative, number one, cannot be your qualifying child. Number two, the person cannot be related to you in any of the ways listed in Table 2, Step 2, page located on page C, that is tab C, page 6 in the 4012 resource guide. Number three, the gross income test of the relative, that is another requirement. And four, the taxpayer must have provided more than half of the relative's total support. Once again, not covering these topics in depth because you've already seen and understood them from the fundamental course training. or at least you know where to locate them in your resource guide, Pub 4012, to help you out. As this slide indicates, all income is considered taxable unless it is specifically exempt from the tax law. Pub 4012 tab D provides quick reference tables of what is considered taxable income, what is considered non-taxable income, as well as armed forces taxable income and non-taxable income. Our sites are not trained to prepare armed forces tax returns. However, there are programs which do. Point: always consult Pub 4012 tab D for all things income. I thought this would be a good place to display an actual TaxSlayer input screen. There's a new word. Now there's a new word, TaxSlayer. TaxSlayer is our vendor provider of the software used to prepare federal tax returns for our taxpayers or clients. This screen is the income input screen. In the software, there are several different screens. We have a screen for adjustments, income, deductions, etc., just to name a few. My point here is to be very aware when inputting data that you are in the proper screen, at the proper spot. Now, on this screen, it tells us how to enter income. That is our income screen. We start from the federal section and we move over to the income section. The income screen has a screen for W-2s, inputting W-2 information, inputting 1099 information, inputting 1099 retirement and Social Security information, miscellaneous 1099, 1099 NEC, which is a non-employee compensation form that self-employed individuals receive from their payers. Schedule C. Schedule C is the actual profit or loss form that is used for the self-employed individuals. There's a 1099-K that third-party payers generally give to our Uber drivers, our Lyft drivers, our salons, something like that. So just be aware, all of these items here are income items. The way that we get over to opening up, say, a 1099 miscellaneous input screen, we just go over here and click begin. Now, when you begin the input into the software, you should be mirroring the source document, that is the paper document, into the software. You will simply hit the begin button again on the right of the input screen to begin inputting. I use this only to give you a taste of what the income screen looks like. As we move through the training, I'll be showing you more input screens so that the screens won't be so foreign to you when you actually begin your actual input into the practice lab. Oops, there's another new phrase, practice lab. When you begin to take your advanced certification test, you will need to prepare 3 tax returns in the practice lab. That means actually inputting taxpayer information into the software. When you begin to take your advanced certification, you will need to prepare these 3 tax returns in the practice lab. Once the returns are prepared, you will use the prepared returns to answer the questions on the test. No worries, it'll make more sense as we get into this a little bit later. In the meantime, you can pause here to go to the Pub 4012, tab D, page 7 through 69. Here is an opportunity to view most of the TaxSlayer input screens with explanations. Recall I said to mirror the source document or the paper document into the software exactly. Well, you will find the specific numbered boxes on the source document or paper document matches or carries that same numbered box in the software. In other words, whatever's in box 1 on the W-2 source document, you will input that data into the box 1 in the TaxSlayer W-2. Once again, we've seen the types of income. You've already seen the types of income in the fundamentals training lesson. And I believe you were given an exercise to match the incomes with the particular source document. So this is simple reiteration. Now, moving on, let's speak a little bit about adjustments and deductions. As this slide indicates, both are tools used to lower your taxable income as well as reduce the tax owed on the tax return. Information can be found in tabs E and F of the publication 4012, your resource guide. Adjustments typically reduce the income, while deductions typically reduces the tax liability. Repeat. Adjustments typically reduce the income, while deductions typically reduces the tax liability. Either way, the taxpayer is receiving some benefit on their federal income tax return. Like we saw in the income lesson, where to input income while identifying the different income types, this slide shows the TaxSlayer input screen for adjustments to income. From this adjustments to income TaxSlayer screen, our clients typically deal with numbered items, 2, which is educator expenses, 4, which is our health savings accounts. 8 could be a penalty on an early withdrawal from a savings account or a CD. Number 9, sometimes we'll deal with alimony. We don't get too many of these, but should you have a taxpayer that has some alimony or has paid some alimony, you might want to consult your site manager or one of the other seasoned volunteers. 10, traditional IRA contributions. These are retirement contributions. 12, we see quite a few student loan interest. And 13, other adjustments such as jury duty pay. As you can see from the screen, each numbered item, there is some verbiage which can assist you. Adjustments, once again, are located in the Pub 4012, tab E. Now, let's look at a few of the adjustments individually. Pub 4012, tab E, page 8, provides us with questions and answers regarding the educator expenses, not to be confused with education expenses. Here, the educator expenses says, what is the maximum benefit? There we go. The answer's $300, or if the taxpayer is filing jointly with their spouse and the spouse is also an educator, then there could be a maximum amount of $600. Who can claim the expense? This is the definition of eligible educators. What are the qualifying expenses? There's your answer right here. What are non-qualifying expenses? There's your answer. And what other issues apply would be here. So this is a pretty explanatory chart regarding educator expenses on page E-8 in your 4012. Another popular adjustment for the taxpayer is the health savings account, or the HSA. The taxpayer would need to qualify or meet certain requirements to use this adjustment. Pub 4012, tab E, page 13, provides a screen tool to help you make that assessment. The HSA is managed by a trustee. The taxpayer, employer, as well as others can make contributions to the taxpayer's HSA. When the taxpayer pulls money out of their HSA account to pay for doctor's visits, dentists, over-the-counter medical items, etc., that is termed a distribution. So you see, distributions must be used for medical reasons. If the distribution is not used for medical reasons, the taxpayer is taxed on that distribution. Sometimes part or all of the medical expenses are reimbursed by insurance. It is incumbent upon the taxpayer to keep up with those unreimbursed paid medical expenses so that adjustments are calculated correctly in the software. Clearly, information regarding HSA is shown in publication 4012, tab E, pages 13 through 19. Take some time to review those pages. Both HSA contributions and distributions have their own federal tax form. Let's just take a look at them quickly. HSA contributions are reported on the form 5498SA, indicating how much was contributed to the HSA account. Form 1099 SA is used to report HSA distributions. I encourage you to read the source document or the paper document because a vast majority of the IRS forms resemble each other. So this form may look like another IRS form. They are all kind of third of a sheet of a paper and carry this format. So be sure to read the form as well as the description of the form, which is right here. Okay? Another adjustment to the federal income taxes is the individual retirement account. This is the actual form the taxpayer will receive from the plan administrator of the retirement account. The taxpayer, as well as others, make contributions to the taxpayer's retirement account. This form originates from the plan administrator or trustee of the IRA account. It informs the taxpayer of how much was contributed to the IRA and is available as an adjustment on the taxpayer's tax return. Taxpayers are allowed an adjustment of up to $7,000 or $8,000, depending upon the taxpayer's age and the modified adjusted gross income restrictions. Simply put, the IRA contribution cannot exceed the taxpayer's total compensation for the year. If it does, the taxpayer is penalized on the excess contribution unless the taxpayer pulls out that excess before the filing deadline of the tax return. Tax layer input screens are shown in the Pub 4012, tab E, pages 20 through 21. Here again is another adjustment which we see a lot of at our VITA sites is the student loan interest adjustment. As you can see from this slide, there is a maximum which can be used each year, as well as other qualifications. Once again, the Pub 4012, tab E, page 22, is where you will find additional information. Let's just walk through that really quick. So here we have adjustments. Here's the maximum benefit. There are your loan qualifications, student qualifications, the time limit, and then the phase-out amounts, which has to do with the adjusted gross income once again. This is Pub 4012, tab E, page 22. This slide represents the actual IRS form which the student should receive. If the taxpayer does not receive this form, they should be connecting with the entity that is holding that loan. The taxpayer will need to present you this form before you can begin any student loan interest input into the TaxSlayer software as an adjustment. Now, I've already addressed the first four adjustments, and now let me just address briefly the last three. As I indicated early on, and as you can surmise, the TaxSlayer adjustment screens, there are many. However, VITA does not deal with all of them. The list shown here are the more popular ones that we see at the VITA locations. Briefly, the penalty on early withdrawal from specific accounts can be an adjustment on the tax return. That information will come to the taxpayer from the financial institution on the Form 1099 INT or interest form. Since interest is income, all the data on that income document will be input on the TaxSlayer income screen. If there is a penalty on early withdrawal shown on the Form 1099 INT, that penalty automatically flows to the necessary adjustment sections all by itself. TaxSlayer does that for us. The software does that for us. See Publication 4012, tab E, page E-4. Now, the next one is the alimony. If a taxpayer pays alimony to an ex-spouse, those alimony payments could be used as an adjustment on the tax return. Alimony requirements are found in Publication 4012, tab E, page 19. Alimony is an adjustment to the tax return for the payer of the alimony, but it is also income to the recipient of that alimony. So just keep that in mind. The self-employed, the next one is the self-employed health insurance coverage. That is another adjustment that can be used for tax purposes. Publication 4012, tab E, tells us not to enter that adjustment in the adjustment screen, but to show it as an expense on the self-employed income and expense schedule, which is the Form 1040 Schedule C. That will, we believe that helps the taxpayer out a little better in terms of reducing the income down. Self-employed Schedule C income can be derived from the taxpayer's own income statements, records, or from the 1099 NEC, which is the non-employee compensation form, or even from the Form 1099, which is the 1099 miscellaneous form. So once again, it's critical to read the source document, which in more times than not dictates where to go next with the data input. Publication 4012, tab C, Income tab, includes loads of information and input screens dealing with the Schedule C for the self-employed. Remember to use form or publication 4012, the resource guide. It is yours. Use it. Has all the information you need. Should you require help in any area, though, don't hesitate to contact your site manager or another seasoned volunteer. This slide represents the TaxSlayer input screens for adjustments. These are the actual input screens. Here, I think we've already seen this earlier. There's your educator expenses. You just hit the begin button or select the begin button. And it tells us right under there, report unreimbursed business expenses from professional development, classroom supplies, etc. So it behooves us to always read, as they say, the fine print. So now we've already talked about adjustments. So let's talk a little bit about deductions. Deductions, like adjustments, are designed to reduce the gross income or adjusted gross income down to taxable income. The taxable income is where the taxes are paid, not at the gross or the adjusted gross income level. The way we arrive at taxable income, we start at gross income, subtract out the allowable adjustments and deductions. So we start here. Our deductions consist of our standard deduction or itemized deduction, to our enhanced senior deduction, which came about with the one big beautiful bill in 2025, and also the qualified business deduction. Our goal is to reduce gross income down to taxable income, where the income taxes are figured or assessed. This screen represents the standard deduction chart shown in the publication 4012, tab F. The chart shows the standard deduction for most people, typically folks under age 65. The second part, this is the first part, standard deduction. If I was single, if my filing status was single, this would be my standard deduction, $15,000. If I was married filing joint return or a qualifying surviving spouse, this would be my standard deduction for folks under age 65. The second chart, however, shows the standard deduction for folks 65 years of age or older and are also blind. This chart also tells us to go to tab R in the 4012 for a definition of what blind is according to the IRS laws. So let's just take an example here. We have taxpayers who are married filing a joint return. The first chart indicates their standard deduction is $30,000. Now, suppose that one of them is over 65. Look at the starred part here to perform a small computation, arriving at 1 for the sake of our example. Then we move to the arrow at the married filing joint, which is right here. Locate 1 in the middle column, which is here. Then move across. The married couple's new standard deduction is $31,600. Now suppose both are over age 65. Their new standard deduction is now $33,200, and so on. So I think you get the gist of it. The charts and trees located in your resource guide, put 4012, are there to help you to gain a better understanding. So use your resource guide. Now, do you need to figure all this out or make a computation? Nah, the software does all this for you based upon some basic information that's already been input into the software before getting to the deduction. Recall seeing this slide a little earlier. I wanted to draw your attention to the red circled item, standard deduction or itemized deduction. What this means is the taxpayer is allowed the one that will provide them with the most advantage. If the taxpayer's itemized deductions exceed the standard deduction, then the taxpayer is allowed to use their itemized deduction. As you were exposed to in the fundamentals lesson, itemized deductions include items such as paid medical expenses, real estate taxes, charitable contributions, etc., etc. Tab F in the Pub 4012 addresses information on itemized deductions as well. In addition to the standard deduction or the itemized deduction, there is also a new enhanced senior deduction for the taxpayers who are age 65 or older, brought about in the One Big Beautiful Bill enacted in 2025. The One Big Beautiful Bill says that they are entitled to a little something extra in the amount of $6,000 per taxpayers if their age is 65 years or older. If the taxpayers are filing a joint return and both of them are age 65 years of age or older, each of them are entitled to the $6,000 deduction on that joint tax return. Now, does this mean that the taxpayers are getting a $6,000 refund? No. It means their gross income is being reduced by the standard deduction or itemized deductions and the enhanced senior deduction, and even the qualified business income deduction if those taxpayers have a business, because the qualified business income deduction is based upon self-employed income or business income. So, as you can see, those of us that are age 65 years of age or older, we have the age 65 deduction, regular standard deduction, plus the enhanced senior deduction if we qualify. And then if we're in business, we also get the qualified business income deduction. Once again, do you need to figure all this out through various and sundry of calculations? No. Once our very smart software does all the figuring based upon informational data that's already been input into the program, the software gives us an amount, puts it where it needs to go, and we're going to call it a day. We'll spend some more time on the One Big Beautiful Bill as we move through the training. There were several pieces that were enacted that could affect our clients. Those are VITA clients. Now this screen shows you the Form 1040 Individual Income Tax Return. I want you to look here on page 2. Line 11B says amount is where the adjusted gross income amount shows up. I've already mentioned adjusted gross income before. Line 12E, there is your standard deduction, your regular standard deduction amounts is here. Standard deduction or your itemized deductions. Now, your itemized deductions are going to be on Schedule A, which captures all of your paid medical expenses, your mortgage interest, your real estate taxes, etc., etc. So remember, it's your standard deduction or your itemized deduction. Line 13A talks about the qualified business income deduction. That is for our business people. They get a percentage of their profit based upon some other things, but it is automatically figured from the inputs that we have already done up to this point. Then we have our 13B here, additional deductions from Form Schedule 1A. That is where the enhanced senior deduction shows up, as well as other One Big Beautiful Bill enactments. Schedule 1A is a newly minted IRS form, so we'll get a chance to take a look at that earlier. But my whole point is here, we are simply reducing our adjusted gross income down to our taxable income by taking into account our standard or itemized deductions, our enhanced business deduction, and our qualified business deduction so far. By the way, when you need help to determine where to quickly locate tax return information in your Pub 4012, simply go directly to the different tabs shown here from the resource guide. Inclusive in these pages are quick reference information and information for the form 13614C as well. So this is in our 4012, tab B, page 3-10. All types of critical pictures of information and where to go to find stuff. As I stated earlier, after starting with gross or adjusted gross income and reducing that income down by using the adjustments and deductions provisions in the tax law, we have now arrived at taxable income. Once again, these adjustments and deductions are only used to reduce the income. The adjustments and deductions are not refunds. As mentioned earlier, taxable income is where the federal income taxes are assessed or figured. Some taxpayers are assessed additional taxes because of other events or issues which has transpired over the year. The additional assessed taxes are captured on the Form 1040 Schedule 2. The more common other taxes for VITA clients are excess premium tax repayment, which has to do with healthcare subsidies received while participating in the Affordable Care Act or the Obamacare through the marketplace health insurance system. This repayment is shown in Part 1 of the Schedule 2, Part 1. I will provide more context in this area as we move along, but that repayment of that amount would be shown in Part 1. I believe it is A, but we'll take a bigger picture of that as we move along. Part 2 of the Schedule 2 is used to capture, here's your Part 2, is used to capture taxpayers who are self-employed, their Social Security taxes. That is called self-employment taxes. Um, Self-employment tax is the same thing as Social Security taxes, but the self-employed individual pays those taxes at a higher rate on their profits when their profits are $400 or more. Okay? Those self-employed entrepreneurs capture their income and expenses on the Form 1040 Schedule C. Believe we mentioned this earlier. Schedule C income could come in the form of cash payments, could come in the form of 1099 NEC or non-employee compensation form. It could come in the form of a 1099 miscellaneous or even from a 1099K form, which is a third-party payer form. If their profits, that is their income from all sources of self-employment, exceed their expenses, which could include their supplies, their business miles, their payments to vendors, or other expenses for the business, and that profit is in excess of $400, they will have to pay the self-employment tax. The tax layer input screenshots are shown on or in the Pub 4012 tab D pages 37 through 41. So you can get an opportunity to look at those pages. Part 2, Schedule 2, also has a line for additional tax on IRAs. We've already talked about IRAs. Although their IRS calls it a tax and it's called a tax on the tax form, it's really a penalty. It could happen for IRAs if the taxpayer drew money from their retirement account early. They had not met the certain requirements for pulling the money out, and the IRS will penalize them on that early withdrawal from the retirement account. If the taxpayer ends up meeting one of the allowable exceptions to this penalty or to this tax, then they are not assessed it on the tax return. However, there's another form that they'll have to fill out to show the IRS that they have met one of those allowable exceptions. Those allowable exceptions are found in the Pub 4012 tab H, page 7. There's a number of them, so take some time to review the exceptions. Some of those exceptions, for instance, the taxpayer can draw money from the retirement account if they are drawing it to pay for higher education, or they are drawing it to pay for big medical expenses. If they meet those exceptions, the taxpayer is not penalized for drawing the money out early. And as I say, there's another form that will automatically populate normally to address the penalty, the exception to the penalty. Another thing with IRAs, the taxpayer could contribute too much money to the IRA. If the taxpayer does not withdraw that excess amount timely, that penalty is assessed on that IRA, and it will show up in Part 2 of the Schedule 2 of the 1040. The last one on Schedule 2, page 2, that is or was common in is the repayment of the first-time home buyers credit. This credit was available to first-time home buyers in 2008 and 2009, where the IRS essentially loaned the taxpayer money in the form of a refund to purchase their first home. The taxpayer was required to repay that loan incrementally over the next 15 years, interest-free, in the form of other taxes. As I mentioned, this loan or repayment uh, taxes should totally be phased out in the 2025 filing year, this year. One more, I said it was the last one, but one more is the tax on the HSA distribution. Recall, I've already mentioned this earlier when I talked about the health savings account. The taxpayer is allowed to use or withdraw money from the HSA funds to help pay for medical expenses. If the money distributed from the HSA is not used for medical expenses, the taxpayer is penalized on the amount that was not used for medical expenses in the form of additional tax. The Form 1095A, this is a picture of it. This document represents what the taxpayer should have in their hand when they come to the site. This is your health insurance marketplace document. This document shows recipient information here, who was covered in the insurance, as well as the monthly premiums here. This document comes from the marketplace. If the taxpayer indicates on the Form 13614C, the intake sheet, or verbally says to you that they had marketplace insurance for even one day, they need to obtain this form from the marketplace. Generally, they can call the marketplace and obtain that information really quite quickly. The Form 1095A information is input into TaxSlayer and ultimately ends up on the Form 8962 Premium Tax Credit. So we talked a little about that repayment. Remember, we in the additional tax lesson, the repayment of the premium tax credit. This is what we're talking about right here. So let me move on to the next screen. As you can see, part two of this form, the 8962 premium tax credit form, the part two resembles the 1095A. Once we input the 1095A information into the TaxSlayer, the Form 8962 calculates whether or not there is an underpayment or an overpayment of the credit. If there is an underpayment, which is between lines 24 through 26, if there is an underpayment of subsidy based upon what the taxpayer told the marketplace their income would be, then that means the taxpayer is entitled to a refund of those underpaid amounts. Okay, I know this is hard to understand, but if the taxpayer, say, told the marketplace that their income was a small amount, and now that the taxpayer is filing the return, the income is larger than what they reported to the marketplace. That means the marketplace have overpaid the taxpayer in subsidies because the taxpayer originally reported a lesser income. So anyway, once all of this gets input, or once all this is populated, when we input the 1095A, the calculations will either result in an underpayment to the taxpayer, meaning the taxpayer is getting a refund of that underpaid amount, or it could be that the marketplace has overpaid in subsidies to the taxpayer, which means now that the taxpayer is required to pay back part of those subsidies in the form of a tax. Remember our additional tax lesson? That was one of those, repayment of the premium tax credit. And that repayment is going to show up here. Once again, do you need to do any calculations at all? No. The TaxSlayer software, once we input the information from the 1099-A, the software automatically calculates everything that should go on the form 8962, which ultimately flows to the repayment. Remember the Schedule 2, 1040 Schedule 2, that repayment amount here is going to flow to the Schedule 2, the underpayment of those subsidies is a refund. That's going to flow into the payment section on the 1040 return. But I've gotten a little ahead of myself, so just kind of keep that in the back of your mind, and we will roll back around to it. Remember we talked a little bit about self-employed individuals and business people, the Form 1099 NEC, non-employee compensation. Well, here's a picture right here. This just tells us that a payer, which is the payer's identification here number here, over here could be the payee's number, which could be Social Security number, and the amount of money that was paid, as well as if any federal income taxes were taken out on this NEC. Here is a picture of your 1099 miscellaneous form. This can also be used to report possible self-employed taxpayer income or business owner income. Typically, the taxpayer should be bringing in one of these. If they've received this from the payer, they need to have this in hand when they arrive at your site as well. Remember, these types of incomes are going to flow typically to the Form 1040 Schedule C, the profit and loss statement of the self-employed or the business owner. Now, this form is a 1099-K. It is really an informational document used to improve voluntary compliance or reporting of third-party payers and third-party payees. The 1099-K, another income source document for the self-employed individuals. These taxpayers normally are probably shared drivers, like a Uber, like a Lyft, like a VITA. It could even be a Venmo, an Etsy, PayPal, or any type of delivery service. The payor will issue this form to whomever he's making this payments to if the payer paid the individual or the business $20,000 or more in a year, and there were 200 or more transactions with that business or with that individual. So, based upon that money amount and the transaction number, our taxpayers may not get this form. So the taxpayer themselves, if they're self-employed, may need to rely or needs to rely upon their own records. And being in business or a business owner, it's incumbent for that business owner to keep up with his records anyway. Now, let's say that I have a taxpayer that was a shared driver, an Uber driver, or a delivery person, a Lyft, or something like that, and they did not receive this form. Generally, payers of this type of income has their own platform that they use. They give that Uber driver or that Lyft driver access to that platform. So that driver then can go to the platform, pull it up, and be able to see all of the income that the payer has paid to them, as well as all the allowable business expenses, so that that driver can complete their tax return correctly using those figures as well as his own records to arrive at correct um, self-employed income. This screen or slide represents the form Schedule C. You can see part one is where all the income is reported right in here. So based upon some stuff, that information that's already been input, all of this is already going to be completed for us, okay? But the income amounts, that is your 1099 NECs, your 1099Ms, your 1099Ks, even cash payments, everything is going to go, income is going to go here. Then we have part two that references the expenses. This could be all of the supplies, all of the miles, all the amounts that they have paid to the vendors, etc., etc., etc. So that if the income exceeds the expenses down here, then and the taxpayer has a profit of $400 or more, this is where that self-employment tax is going to be figured here. Schedule SE is the self-employed tax that will roll over. This amount here will roll over to the Schedule SE and then will ultimately end up on the back of the 1040 in the other taxes section. Okay, so I just wanted to give you a picture of that. You may see this in real life from the quality reviewer if they just wanted to share this with you so you can see a real live Schedule C that's already been completed. And guess what? You'll get to prepare one of these in one of your practice exercises. So this is the way it's going to look when you do that screen preview in TaxSlayer. On that particular scenario, you'll see all of this already completed for you. Now, your other taxes are added to the federal income tax to arrive at the total tax. Okay? TaxSlayer input screenshot for Schedule C is shown in Pub 4012, page D-37 through 41. Let me just make a little note here. As you can tell, all of our adjustments and deductions are taken before we get to these other taxes. Those adjustments and deductions we've talked about previously cannot be used in the other taxes area. The other taxes stands alone. They get no deductions or adjustments. It's just a tidbit of information for you. So then let's move on to allowable credits. Both types of credits will show up on the Form 1040 Schedule 3. So now these are credits, these are not adjustments or deductions, these are actual credits. So we have two of them, the non-refundable and the refundable credits. The non-refundable credits amounts are used to decrease your tax liability. The refundable credits are credits used to increase your refund. That is money in the pocket. Okay? So those are the two credits, the non-refundable and the refundable. Now let's address the non-refundable credits first because they actually reduce your taxes. These allowable credits are designed to reduce or decrease the amount of taxes owed on taxable income. Non-refundable credits information can be found in the Pub 4012 tab G. There are certain qualifying requirements for each type of non-refundable credit shown in tab G. Tab G also displays some of the TaxSlayer input screens. Some of the non-refundable credits, like retirement savings credits contributions, are automatically calculated in the software based upon data that's already been input. Most of the non-allowable, non-refundable credits will ultimately flow from their individual tax forms to the Form 1040 Schedule C, Part 1. We'll have a picture of the Schedule 3 coming up in just a minute. Once again, the allowable, non-refundable credits are used to reduce or decrease federal income taxes only. The non-refundable credits cannot be used to decrease the other taxes, such as self-employment taxes and the other taxes in that area. Feel free to return to those slides if you need a review of those other taxes. Now, our most common non-refundable credits are the credit for dependents, that's children, age 17 years or older, or other dependent relative. That's going to be your Form 8812. That's their individual form. Then we have the child tax credit. This is for the child or children under age 17 and have a valid Social Security number, and at least one parent has a valid Social Security number as well. That also shows up on the individual form 8812. We have foreign taxes. That is a non-refundable credit. That has its own, or the foreign taxes will show up on the form 1099 DIV, which is your dividend form, or the INT, the interest form. Child and dependent care expenses. Those non-refundable credits will show up on their individual tax form of Form 2441. We have our education credits, different from educator adjustments. Education credits are the American Opportunity or the Lifetime Learning Credit. They have their own form. That form is the 8863. Information about those credits are found in 4012 tab J, pages 5 through 10. And we've already said the retirement savers credit is available on Form 8880. That is automatically figured. The credit for the elderly doesn't have its own form, but it does have its own worksheet, and that is figured automatically, as well as the credit for other dependents. That is automatically figured, or that part is automatically figured. As you can see, this is Schedule 3, the non-refundable credits. here are shown in the Part 1 of the Schedule C. Here we have the foreign tax credit. Here we have the child and dependent care expenses, the Form 2441 that we've already put some information into. We have our education credit. We've already filled out, put information into the education tax layer screens to pump out this form 8863. Then we have the retirement savers credit based upon information we've already input. The items 1, 2, 3, and 4 are the most common ones that we'll see at the VITA sites. These others don't particularly. Oh, here's the credit for the elderly and disabled. There's your Schedule R right there. So all of those non-refundable credits gets added together and they're cummed down here on line 8, which ultimately flows to the Form 1040, line 20. So the tax layer does the work for us. We just got to be sure we're putting in the right information to the right form. So now, let's do a really quick recap from line 15. Line 15 is the taxable income. Line 16 represents the tax on that taxable income. Line 17 represents Schedule 2, line 3. This is the repayment of the excess premium tax credit from the marketplace health insurance that flowed from the Form 8962 now to the back of the Form 1040, line 17. Meaning, once again, the taxpayer received too much subsidies based upon their income from the marketplace health insurance, and now they're having to pay back part of that in the form of a tax. Line 18, we're adding the tax plus the excess repayment. Then line 19 is our child tax credit or credit for other dependents. That is our Schedule 8812, the non-refundable credit. Line 20, amount from the Schedule 3, line 8. These are the other non-refundable credits. Remember, line 8 flows through to line 20 on the 1040. Then we have line 21. We're simply adding lines 19 and 20. Line 22, we're subtracting line 21 from line 8, subtracting the non-refundable credits from the tax. Then we get to line 23, which represents the total of other taxes, that is your self-employment tax, the HSA penalties, the IRA penalties, should there be one, or any other penalty. It's going to show up on line 23. Then line 24 now represents the total tax. So now we're done with all of the tax situation, okay? We've done everything that we need to do right here. Now let's speak to payments, refundable credits, balance due section of the Form 1040 return. The payments include federal income tax withheld, which appears on the Form W-2. Payments and withholdings could also show up on some forms 1099, interest and DIV, or dividends, as well as some 1099 self-employed forms. Payments could also show up as estimated tax payments when the taxpayer pays their taxes quarterly. These taxpayers have income where there has been no tax withheld, and so they're required to pay their taxes quarterly because the IRS system of paying your taxes is a pay-as-you-go system. So if they're not having any income tax withheld on those passive types of income, they are required to send their taxes in quarterly. As mentioned earlier, there are two types of credits. We have the non-refundable, used to reduce or decrease the tax liability, and then we have the refundable, used to increase the refund amounts or possibly money in the pocket. From the screen, you can already tell some of the individual tax form numbers have been shown on the earlier lesson on non-refundable credits. You can surmise from this that the credits and the forms starred on the screen carry both non-refundable and refundable attributes or components. When correct required data is input into the specific credit area, the software will make the necessary distinctions as to how much is considered as non-refundable credit and how much is considered as refundable credit. This software does it all. The software automatically figures the earned income credit based upon the data that's already been input. So let me just go to the screen here for just a second. So our payments include federal income tax withheld from the W-2s and 1099s and estimated taxes and others. Then we have the refundable credits include the earned income credit, which is automatically figured via the software based upon information we've already input. We have the additional child tax credit. Remember the Form 8812 from the non-refundable credits lesson? That's that same form. Everything is being captured, both the non-refundable and the refundable portion of the child tax credit. Our education credits, remember Form 8863? That carries with it both a non-refundable credit as well as a refundable credit. And then we have the net premium tax credit from the Form 8962 from the marketplace when the taxpayers' subsidies have been underpaid to him. He gets that underpayment, that amount that he's due back in the form of a refund. Earlier, I mentioned and displayed Part 1 of the Form 1040 Schedule 3, which dealt with the non-refundable credits. Here we go right here. There's Schedule 3, Part 1, non-refundable credits. But take a look at Part 2. These are your other payments and refundable credit, specifically line 9. There's our handy dandy net premium tax credit from the Form 8962. And then we have lines 10 through 13 are typically not our VITA clients. So then we end up down here with the cum total on line 15, and then that figure rolls over or flows through to line 31 of the Form 1040. This is the part of page 2 of the 1040 tax return we're going to be talking about. Let's just review the screen based upon what's already been said. Here we have line 25, A through D represents amounts withheld of federal income tax withheld from all sources, which is here. That's A through D. Then we have line 26 representing the estimated tax payment sent in quarterly by the taxpayer. Line 27 is our earned income credit that is automatically figured. Line 28 represents the refundable part of the child tax credit termed additional child tax credit from the Form 8812. Line 29 represents the refundable part of the American Opportunity Credit from the Form 8863. Line 30, VITA doesn't see these often, but there is a refundable part of an adoption credit. Then we have line 31. This is the amount from Schedule 3, Part 2 refundable credits. For VITA, this would include the Form 8962 amount for the net premium tax credit. Once again, the taxpayer did not receive enough subsidy from the marketplace health insurance system based upon their income. That's why they're entitled to this net premium tax credit. Then line 32, we're simply adding lines 27A, which is the EIC or the earned income credit, plus the line 28, plus line 29, plus line 31. And then line 33 represents the total payments available to bump up against the tax liability. Line 34, here we're subtracting line 24, which is the total tax, from the line 33 total payments, resulted in the amount of the overpayment or the refund amount. Line 35, should the taxpayer want direct deposit, which we highly recommend, we need the routing number and the account number. Using direct deposit, I think I've already said this earlier, results in a quicker refund to the taxpayer, and it's overall safer than sending out a paper check to the taxpayer, which could get lost in the mail, or somebody could pick it up out of the mail, or could drop out of whatever. But it's just not a real safe thing for a check. Typically, direct deposits are within 4 weeks' time. IRS now will continue to send out paper checks via snail mail, but it takes longer by 2 to 3 weeks. Line 36, the taxpayer can delegate part of their refund to be applied to next year's estimated taxes. So the taxpayer's got a couple of different choices down here. And then on line 37 is the amount that you owe. Now, that's not the good part from the taxpayer's vantage point, but there is a line for it. When line 24 exceeds line 33, then there's a balance due. That is your total tax, subtracting out your payment, and the tax is more. So there's your balance due. So now let's talk a little bit about the One Big Beautiful Bill, the 2025 year that was enacted. So the One Big Beautiful Bill says no tax on tip income. This should be no tax on overtime, no tax on qualified vehicle loans. We've already talked about the enhanced senior deduction, and we've already talked about the no payer filing requirement on third-party payers, and we'll cover the Working Families election. That is the Trump IRA. So let's go with the no tax on tips first. Tips are voluntary cash or charged amounts received from the customer. Tip income is generally specific to certain occupations such as excuse me, hospitality services, shared ride drivers, salons, barbershops, could be landscape people, all of those occupations, and can be paid to either employees or to self-employed individuals. Tips typically are shown on the form W-2 your income and wage statement. Forms 1099, tips could be shown there, or tips can be shown from the individual's own business records. Tips should be reported. However, they are not taxed. So some way we have to have a mechanism to back those tips out. TaxSlayer software allows for tips to be backed out or deleted from the gross income via certain input screens in the software program. The untaxed tips will ultimately flow to the Form 1040 Schedule 1A, a new product, IRS product for this year. Now, in regards to the no tax on overtimes, taxpayer overtime income would be included in gross income on the Form W-2. Overtime in this instance is the 1/2 of the time and a half, which is based on a 40-hour week as dictated by the Fair Labor Standards Act. The taxpayer would need some type of written statement from the employer showing the overtime paid for the year, probably the last check stub, so that a simple calculation can be made. Or the employer may have indicated the overtime amount on the Form W-2 Box 14. If this happens, a simple computation to arrive at the 1/2 of the time and a half is required. At any rate, after arriving at the correct calculation, the final number is entered into the TaxSlayer and the software carries it to the Form 1040 Schedule 1A. Now let's talk a little bit about the no tax on qualified vehicle loans. Effective for 2025 through 2028, individuals may deduct interest paid on loan used to purchase a qualified vehicle, provided the vehicle was purchased for personal use. The vehicle cannot be used as a used vehicle or a leased or business vehicle. A qualified vehicle can be a car, a minivan, van, a SUV, a pickup truck, or motorcycle. The vehicle must weigh less than 14,000 pounds, and the final assembly must have occurred in the United States. The taxpayer must be able to provide the VIN number of the vehicle because it will be entered on the tax return. This information is also shown on the Form 1040 Schedule 1A. Now, we've already talked about the enhanced senior deduction from the standard deduction lesson. This will show up also on the Schedule 1A as well. We've already talked about the no payer filing requirement for third-party payers on the Form 1099-K, so I won't be going through that again. Finally, this is the representation of the Form 1040 Schedule 1A, additional deductions. One thing I did neglect to mention for Parts 2, tips, Part 3, overtime, and Part 5, enhanced deduction for seniors, the taxpayer or the taxpayers must all have a valid Social Security number, and they all come with income limitations. The software knows the limitations and makes the necessary adjustments where warranted. Part 6, total deductions, flowing to the front of the Form 1040, line 13B. Now, line 13B is being added to the standard deduction including the over age 65, if applicable, or standard deduction or itemized deduction, pardon me, and the qualified business income deduction. Those are deducted from the adjusted gross income, arriving at taxable income, where federal income taxes are paid or assessed. Notice this: none of the additional deductions shown on Schedule 1A are refundable amounts. None of the additional deductions shown on the Schedule 1A are refundable amounts. Just one more thing I need to mention here, I think, is the Working Families Tax Cut Election, or the Trump IRA account. This is a part of the One Big Beautiful Bill Act that went into effect in 2025. So let me see if I can address that quickly here. This new provision, once again, is from the One Big Beautiful Bill Act. Welcoming a new member of your family will come with new benefits under the Working Families tax cuts. This provision is available to taxpayers who has a child or children under the age of 18 years. This is not a credit, nor is it a deduction on the federal tax return. What it is the taxpayer's election to use this provision to establish an individual retirement account for the taxpayer's child who is under age 18. The taxpayer can make contributions to that account up to $5,000 a year. If the child was born in 2025, and a few more years after, there is a second part in that election. That part is that a contribution of $1,000 can be made to the child's IRA account without the parent contributing anything. In each instance, there cannot be any withdrawals from that account until the year the child's 18th birthday. During that length of time, the IRA is growing in value by accumulating interest income, which is not taxed until the year the child reaches age 18, and either closes that IRA account or converts it to a traditional IRA account. Those are individual retirement accounts. The account is not managed by the IRS, but by trustees or administrators of those accounts. The IRS or the taxpayer can find out more information by searching Trump accounts, or by going to irs.gov and searching Working Families Tax Cuts, which provides an overview of the Trump accounts, of how the Trump accounts work, and answers questions on creating the account, the $1,000 pilot program contribution, and more. Take advantage of this individual retirement account for your child. Starts them off with a pretty good leg up. Once again, this is not a credit nor a deduction on the federal tax return. However, should the taxpayer want to participate in this election, they can do that. We will populate a form 4547 in the TaxSlayer input screen, and once that tax return is electronically filed, that form is reviewed by IRS at the IRS, and then that form is then forwarded over to the administrators or trustees who will be handling those accounts. The Trump IRAs will not be set up and in full swing until mid-July. when the initial $1,000 pilot program contribution will be made. The taxpayer will receive notification from the administrators or trustees with all account information regarding the dependents. Taxpayers will need to remain patient in the meantime. In mid-July, once the account is established from the administrators, taxpayers can choose to make their own contribution to the established account up to $5,000 annually. Who qualifies? To establish the initial Trump account, one, the child has to be the child of the taxpayer must be under age 18 when the election is made. Two, the child must have a valid Social Security number. And three, the child must not have had a Trump election filed on their behalf before now. The child does not need to be a dependent of the taxpayer. However, conditions 1, 2, and 3 must be met. Now, I've already mentioned in the prior lessons these tax credits here dealing with the child tax credit, the earned income credit, which is here, and then the other dependents credit. So I'll just briefly walk through these. Of course, all the credits are based upon age, income levels, and other regular requirements. These are the child tax credit. Some of them are non-refundable and some of them are refundable. So let's just walk through those. For 2025, the child tax credit is worth now up to $2,200. It was $2,000 in the year 2024, but it is $2,200 for 2025 for each qualifying child. A child must be under age 17 at the end of 2025 to be a qualifying child and then meet other eligibility requirement rules. Both the child and at least one parent must have a valid Social Security number. For 2025, the Earned Income Credit eligible taxpayers with no qualifying children may receive up to $649. This is up, I believe, about $7 or $8 from the year 2024. If your dependent is age 17 years or older at the end of 2025, they may qualify for the other dependents credit. So that's an automatic calculation based upon what's already been put into TaxSlayer. So is the earned income credit here. Now, there is a sincere push to get taxpayers to use direct deposits for their tax refunds. Direct deposit is it's just quicker to receive your refund. It's safer and more secure. I believe I've already covered this. While IRS will continue to send paper checks at the taxpayer's discretion, that check will just take longer to receive from 6 weeks for beginning at 6 weeks and beyond. It just takes longer. It runs the risk of getting into the wrong hands, etc. So direct deposit is just a safer method to go. It should be at your bank within 3 to 4 weeks. The taxpayer would need the routing number of the bank and then their account number as signified on the Form 1040 that we just covered. As a tax preparer, it is your job to interview the taxpayer from their own document. If you need clarity, ask the taxpayer. They're the ones with the answer. Be clear, engage the taxpayer in Conversation on creating eye contact typically builds involvement in the process. Taxpayers historically wants to know three things. What is my refund? Or how much do I owe? Why is that? And what do I do next? All of these are valid questions. As a tax preparer, before uh, you give them any answers to those questions, just let them know we always like to put another set of eyeballs on the return to ensure that everything is correct through quality review. And the quality reviewer, when they're done quality reviewing the return, they will let you know and respond to your questions. Allow the quality reviewer to be the bad guy if necessary. Okay, so let's do this. Following are some instructional screens. So be sure to read them very carefully. We're going to start trying to input some scenarios into our tax layer input screens. Our tax layer input screens that we'll be showing you here are just like the real tax layer that you'll see when you get to a VITA site. Before beginning, now let me give you a few more instructions. Since you've already gone through the fundamentals course, you have already established the VITA Central account from this Link and Learn certification link here. That is where you've already taken your ethics and your intake, interview, and quality review certifications already. Just know that you cannot take the advanced certification test until you have passed the ethics or standards of conduct and the intake, interview, and quality review certifications. Okay? So you don't need to create an account here if you've already been there. So hang with me until I get to creating a different account for the practice lab. For those of you who have not taken the fundamentals before coming to the bootcamp training course, you will need to create the VITA Central account. The VITA TCE Central account is where all the test certifications are housed. All test certifications require you to pass with an 80% or better on each test or certification. You are required, once again, to take the standards of conduct or ethics and the intake, interview, and quality review. That is the Form 13614C and advanced certifications. And the ethics and the intake certifications will need to be passed before moving on to the advanced certifications. You are not required to take the basic certifications. Now, get a good look at this screen for those of you that have not established your VITA TCE Central account yet. Go to this link, scroll down to quick links. It says you need to create an account. Since you've not been in the practice lab before, this is your link, and then we'll go to quick links. Here is the screen that you will see after you would have gone to that link from the previous screen that I just showed you. This is your VITA TCE Central one-stop shop for volunteer training. So this is what it looks like. If you haven't been here before, you are going to go to create an account. If you've been here before, you don't need to do anything right now. You already have established an you already have an established account. You can create an account here. For those of you that have not been here before, you can do it here or you can do it up here. You will be creating two accounts to get to the practice lab. Be sure to correctly jot down your username and password for each account because you will need them. I guarantee you will need them. Once again, here you are creating your VITA Central account. Once you hit, you put in you're going to hit create new account here. If this is your first time accessing the Central, create a new account. If you used the system before, you already have an account. You can click Login. When creating an account, you'll need a password. The password for this account must be 12 characters long. Write down your username and your password for the VITA Central account. This is VITA TCE, VITA Central account. You're creating an account. Do what it says here. Write down your username and your password, and then you hit continue. This is just a larger screen, how to create the VITA account. You're creating the account, your name, your first name, your last name, your email address. Now, if you see an error like this in the red, it means your email is already registered in the system. You can either log in to your existing account with that email address or use a different email address to create a new account. So this is pretty self-explanatory. When you get to this screen, group selection, you're just going to jump down here and say create an account. Do not select any of these options here. Instead, skip the section and choose create an account. Once you create that account, this is your welcome letter or your confirmation that your account has been successfully created. Yay! All right, then we want you to come down here where I have circled red, quick links and resources. We're still trying to get to the practice lab. Remember I told you earlier that you will have 3 scenarios that you need to put into the TaxSlayer practice lab. That's where we're trying to get to. So once again, click on quick links and resources. This is the next screen that pops up. Click on Practice Lab. Click on Practice Lab. Now, everyone is participating here. Here you are creating a Practice Lab account where you will be practicing inputting tax return information into the TaxSlayer. So you will see right here, here's your password, and it should be all caps, Train Pro Web, as it indicates. When you get to this screen, you are going to say create an account because you haven't been here before. Create an account. Here is where you're going to begin creating that account. It kind of looks the same as the other one, but a little bit differently. So make sure all of the required information is input. Create an account. For your password, it must be 15 characters long or longer. The program type is going to be VITA. You want to leave the SIDN blank. Once again, I tell you to write down the password. You're going to need it. Don't forget to hit the last button, the last green button to create the account. Once you have all this filled in correctly, hit the green button. After creating your Practice Lab account, you will be brought back here. You've already created the account. Now you're simply signing in to the account. Use your username and your password and hit sign in. Okay? So I hope you jotted down both the password as well as the username. This is the next screen that you'll see. You are now inside the outer limits. You are now inside the practice lab. The practice lab contains a whole lot of information if you wanted to just scroll down and look at some of the tabs that is also on this page. But what I'm just going to give you the Cliff Note version of this. You want to hit the button, go to the practice lab. Hit that button or select that area. Ta-da-da! This is your official welcome page to the practice lab. This is where you will input scenarios 7 through 9. For each scenario, you will select Start New Return. Select Start New Return. Select. Okay, for each one of them. Now, this little area down here is a client search. Uh, let's say that you've prepared returns already inside of TaxSlayer and you wanted to find one of those returns that you had previously prepared. You would go here for client search and do a search. But for right now, for scenario 7 through 9, you're going to start return here. Now, this is where the real work begins. In each scenario, you will find fake Social Security cards for each person in each scenario. You will uh, use what's on the Social Security card, and remember the last four X's or the last four digits of the social or the last four digits of the employer's identification number. You make up those last four numbers. And they have to match. If they don't match, TaxSlayer let you know. You need to go back and fix it. And that happens in real life situations as well. Now you're ready. Let me give you some instructions. Go to the hyperlink and bookmark this form. For those of you who have not had fundamentals, go to this area here and then go ahead and bookmark it or tab it on your laptop or your computer, because it's just going to make it easier for you to toggle between the TaxSlayer and the scenarios. Okay, your scenarios are located, your tests are located in this book. For those of you who have already had the fundamental training, this is the same test retest booklet where you've already taken your ethics standards of conduct and your intake interview and quality review training. Once again, this is your text test booklet, okay, that houses all three of the required certifications you need to take. As the screen indicates, you will be inputting practice returns into the practice software, which is the same as you'll be using when preparing real live returns. You will be preparing 3 returns. Each return carries a scenario of facts pertaining to the taxpayer or taxpayers, along with fake Social Security cards, different source documents such as the W-2s, 1099s, college information statements, etc., etc. All of which you will be using to prepare the practice returns in the practice lab. For each scenario, 7 through 9, I will provide a few touch points or checkpoints that you can refer to before, during, and after preparation of the practice scenarios. You will use your prepared practice returns to answer the questions from the real test booklet. That is the Form 6744 pertaining to the specific scenario. Just know that there are actually 9 scenarios. That's 1 through 9. Only scenarios 7, 8, and 9 require tax preparation in the software. In order to pass the test or the certification, all scenario questions must be answered. Once again, you must pass with a score of 80% or better. You will have 2 opportunities to pass the test certification. If you don't pass the first time, a tax layer or the test gives you an opportunity to retest, hence the term test retest booklet. The retest will not give you the actual scenarios there. What the retest does is give you a portion of the scenario with different questions than the original test. So that's what it does. Hopefully you won't have to retest though. This is the Form 6744, your test booklet. Bookmark it to your computer for easy access. This booklet, once again, I can't stress enough, contains all the tests that you will need or all the certifications that you'll need. Uh, your standards of conduct or ethics, as well as other crucial information regarding the test, are found in this book, pages 1 through 5. So take some time to read that information. It'll help you. The booklet contains the test and retest. If you don't pass with 80% or better, you'll need to take the retest. All scenarios will be the same. However, the questions would be scrambled up or mixed up a bit. Write down your answers for each question, for each scenario, so that when you begin to take the test or the retest, you'll have easy access. The tests are graded instantaneously, so you will know right away whether or not you pass. My point to you is to review, review, review. Review the questions, review your responses before hitting the submit button. Okay, enough said. Now, this screen and the following 2 screens are the actual scenarios for scenario 7, 8, and 9. Pay attention to the highlighted area. Each scenario includes several pages, so don't just stop at the first page that you see. Turn the page. I guarantee you there's more. When you see the 4 X's in the Social Security number or the employer's identification number, use whatever 4 digits you choose in the practice lab. Use the scenarios from your test booklet because this would be a little bit clearer. This is sort of small, but go to your Form 6744 and pull up the actual scenario and read all of the pages that pertain to the particular taxpayer. Jot down stuff that you need, or I'm trying to figure out how you would highlight it on the Form 6744, but you can probably figure that out too. But read everything to make sure that you have everything in your head before you start doing any inputs. Once again, this is scenario number 7. This is scenario number 8, Jocelyn Jones. And this is scenario number 9, called Graves. There's your highlighted information about the last 4 digits here. This page represents your touch points or your checkpoints. Once you have completed a scenario, or as you're going through the scenario, you can come back here to see if your practice lab information matches these checkpoints. If they do, great. That means you're on the right track. If the numbers are not tracking or they don't match, that means you need to return to the scenario, reread the scenario, then go back to the practice lab to make sure that you have everything in there as it should be. You will notice for scenario number 8, this is some wrong information where the red X is, and here is the correct information here for Jocelyn Jones. You've already seen this before, so just in case, once again, for getting into the practice lab, it is Train Pro Web. Okay? Now, you've already seen this screen before as well. You've already established your username and your password, and you've already signed in to get into the practice lab. Just another picture of the practice lab homepage right here. Once again, this is your official welcome page. For each scenario, you will select Start New Return to begin any input at all. This is your follow-up screen. You're inputting the Social Security numbers. The Social Security numbers must match before it will allow you to go to the next screen. Once the numbers match up, you will hit Start Return. Once you hit Start the Return, this will be excuse me, will be your next screen. Will take you to what is the filing status. These are your filing statuses here. Always remember, in order to move to the next screen, you will always need to hit the Enter button or the Continue button right here, which takes you to the next screen or moves you to the next screen. Well, volunteers, we've come to the end of the road. Go forth. I only have one admonishment for you, or a few admonishments for you. Remember to read, review, and don't assume. All the facts are laid out before you. Remember, you can always come back here for clarification. You can consult your resource guide, publication 4012, which contains the different charts, different decisions, examples, etc. Remember to take your time. Remember, there are 9 scenarios in the advanced certification. To take the test or the certification, you will need to sign into your VITA Central account. Okay? Do you need further or additional assistance? Let's move to our last slide. These are the remaining training dates that we have. We'll have a virtual study session on January the 30th. You can go to your Better Impact page to sign up for any of these events. We'll have another boot camp training April the 6th. Should probably be virtual boot camp training, which is this training. And on Friday, February the 7th, is our last chance virtual. In between, there may be some additional study sessions set up. So be in constant contact with your Better Impact page to see if there's any other study sessions. So I'm signing off now. Go forth and do well, volunteers. VITA needs you. Thank you.